our panelists, I see Lawrence from Blockwall, the co-founder and general partner. Great to see you. I see here on the screen Astrid Woolard from Smape Capital, a young venture fund. Very excited to have her on. I also see Alex from Frankenberg in, I don't know, where are you, in El Salvador?
Yeah.
On the beach. You have been recently there. So Alex from Frankenberg, the managing director of High Tech Gründerfonds, invested over the last, I think, more than 15 years, I think, in about 600 startups, largest European VC, if I'm not mistaken. Very happy to have you here. And last but not least, the entrepreneur's perspective, very, very important here. Vito Romovic, the founder and CEO of Polar, a project that I have luckily been in touch with, I think, from April last year. And very fascinating to follow this journey, let's say, from the first wins in the Solana hackathon, and then basically the fundraising and how this was structured, how this has changed. And this brings me to our topic, Venture Capital 2.0, maybe better, venture capital in the Web3 world. Did that actually change fundamentally, and what does it mean for venture capitalists? Yeah, I mean, we could say that the world is, so to speak, fundamentally different, because I would say the whole role of VCs is a little bit under threat, as people can now directly invest in tokens. So what is actually the role of a venture capitalist in the future, in this emerging token economy? Because as a venture capitalist, you are an allocator of capital in the first place, that's for sure. You do a due diligence on projects, and many of those projects today can issue via their token, can engage via their token directly with their community, which are at the same time investors or become investors in some shape or form. So I think a very interesting development. So what does all this mean to you? Now, who wants to start? Should we give ladies first? Astrid Woolard from Smape Capital. Maybe you can say a few words on yourself, on Smape, how this came to life, what the philosophy about it is, and what do you think about this change we are seeing? Because I personally think it's a fundamental change.
Perfect. Yeah, no, I'm a general partner and head of research at Smape Capital, and we're a purely blockchain-focused fund, and we predominantly invest into tokens as asset class. We will take equity if it sort of gets us to the token of a company for regulatory reasons. We're platform agnostic, because we just believe in sort of a multi-chain universe, and that every chain will sort of have its own prime use cases. And for that respect, we're also very much interested to see, how all this interoperability with different bridges actually will come along. We have different sectors that we invest in, less in DeFi, because we think that's already a little bit behind us now from, purely super innovation perspective. I think there will be some interesting use cases, but it will be hard to find a few things that will really challenge that. I think that, as you say, like, our VCs in this space fundamentally different to the traditional VCs. I mean, there are some dynamics that are a little bit different. I mean, obviously there are different topics that we also screen, like token utility and token economics. And we're very passionate about token utility in that respect, to really see that does the token really make sense in an ecosystem? Is there really a mechanism that will accrue value to this token? And is there actually a way that you could bypass it, which again means that it's probably less likely to be a good token design? Also token economics kind of structures are quite important to us, that there is no sort of majority that really holds too many tokens from investor perspective. Whereas in classical venture capital, you try to get as much equity and as much allocation from a company as you can get. So here it's a little bit, at least we have this approach here to really de-risk also investments, and also feel that this sort of empowers more the decentralization aspect. What is also a little bit different is that actually VCs these days have to pitch to projects just the same way that projects pitch to VCs. So because there's so much capital lying around, you actually need to also prove your value add and what you actually bring into the table. In our case, we're quite unique in that respect, that we have a very strong legal and regulatory angle where we can actually also support projects. And this is also something that we take into our own due diligence process, that we only will invest into companies where we know there is sort of, for day present, a strong regulatory clearance, and from all the kind of networks that we hear also, that also in the future these business models will be possible to sort of conduct. And so this has been a quite interesting dynamic from that perspective.
Thanks a lot, Astrid. I think many very valuable points here, especially also here towards the aspects here, what value add a VC can bring today here in terms of regulatory support, and for many, let's say, young teams as well that are out there and hit basically a reality when they want to start a venture. This can become an issue. So maybe with that, Vito, I want to include you very early, I think, in the conversation, because you are actually very experienced here from your fundraise, which is, I think, has been completed now in a first round with funds here in September, October, and then you did even a second round with the launching of a utility token. Maybe you want to give us a brief overview of all art, and how, especially with the let's say angle on the fundraising aspect. How did you experience that? How did you experience the interaction here with the investors, with the funds, and what's changing as well, or what's special?
Yeah, sure. Thanks for the introduction, and thanks for the invite, Oliver. So there has been a lot of developments in our camp in the last, let's say, couple of months, as you mentioned, ever since we announced publicly that we will be doing the blockchain integration in Solana with our products that we developed previously, which is called VR All Art, which is a virtual reality platform for galleries and museums to create virtual reality exhibitions. We now started integrating the blockchain part with the NFTs. And that happened actually before the NFT full boom on Solana. I could say that we were one of the projects on Solana that sparked this boom with our open NFT marketplace called SolC. But you mentioned that funding has changed, and we can say that it did change. I mean, the whole process of finding the right partners is completely different today. And I could say that COVID changed a lot of things for us. So first time when we started VR All Art, we started it in 2017 in this previous crypto cycle. And immediately when we started thinking about virtual reality exhibitions and selling of art in virtual environments, it was natural that we wanted this blockchain component entangled inside of the whole experience, in the sense that, hey, you come into the virtual reality, you see a piece of art, you want to buy it immediately. You don't want to enter your credit card. Maybe the piece is expensive. You cannot do an expensive transaction, online. Maybe a piece will cost $1 million. On blockchain, it can happen instantaneously. So it made sense. But then when we started raising funding in 2018, we had to go from conference to conference and to talk to people live, and to showcase what we're doing. And it is a completely different experience than what it is today. because how our funding process looked like, that was Telegram, that was Zoom, and that was Google Meets. That's it. And from perspective of new entrepreneurs that are getting into this game, they should know that everything is happening instantaneously. There is no literally, like, there is no pause when you start the process. When you prepare your tokenomics, your pitch deck, and you start gathering the momentum, everything is going on in Telegram groups. People are inviting each other. Hey, I'm the investor, you have to meet these guys. Hey, who can you introduce me to? Okay, I'll introduce you to these guys. Hey guys, hi guys, here's a calendar link, set up the meeting. So it's super fast. It's something that I never experienced in my entrepreneurial life previously, because I ran my own company for 10 years. And what happened this year, actually last year, it's beyond imagination, like with all of that. And now, just to maybe cut the long story short, because I could talk about this for hours, what we did is very interesting, in the sense that we did a private round, and then we did an IDO, which is a public sale of the token in December, just before Christmas. And we did the first IDO that was fully KYC compliant.
I chime in for the audience. Initial Discord offering. That's actually a tool, a community tool, the Discord, for those that don't know it, which actually, is more like from the gaming industry. Yeah?
It's a new style of public sale, where people are putting, especially we use this new type of public sale. It's called, we call it the Mango style, because the Mango project on Solana did it first. It's like you put the money into the pool, public, like retail puts the money into the pool, and then at the end of a funding period, the amount of tokens that we dedicated to the pool are actually linearly spread to all the participants in this process. But what is here interesting is that it has two rounds. First lasts 24 hours, the second lasts 24 hours. In the first, you can put money and remove money. In the second round, you can only remove money. So it is a new process of actually price discovery. In that way, you can actually, public decides on what is the right price of the token. So if you put the money inside and you don't like that the price is maybe too high or something, you can get the money back in the second phase. So we got our price discovery model, and then we went out and listed the token on the exchanges. So we are now publicly traded token, when we are very happy about it. But now comes the utility. And the utility of the token, we are also very proud that we actually launched the utility of the token on the day that we released the token after the public sale. And this was very important for us, both doing the KYC and doing this utility on the day of the launch, so that we could be completely regulatory compliant. And you cannot say this token is a security. No, it can be used on Sol C in the moment of the launch.
Interesting, very, very interesting aspect, I think. And also the aspect that it's a utility token and still basically brings in money into the ecosystem. So a complete change here. And I know with that, maybe passing on first to Lawrence, coming from I would say, early days as one of the first, or maybe the first crypto fund here, in Germany. I think you first invested, when I remember correctly, into or launched a fund for the liquid market, and then also a classic VC fund. But I heard from a conversation with Dominic recently that you also start to invest in token projects. Is that correct?
Almost. So hi, everyone. So basically what we do is we run 3 strategies across 3 different vehicles. The first one is a closed strategy where we did early stage investments in layer 1 protocols. So we were first day investors in Solana, Fetch, and a few others. We have a second strategy that is a classical venture fund that essentially invests in software companies that are in and around the blockchain ecosystem. And we have a third, most recent strategy, which is an open-ended token-only investment vehicle which invests in early stage seed rounds as well as liquid tokens. And coming back to the question that you originally posed, like what's changing for venture, I would argue that there's something that has been there for a long time and which has always come back when it comes to token, which is that despite the fact that a token is liquid, it's still venture. So what we see an increasing attribute towards teams, what we've been proclaiming and doing for years now, is that just because a token is liquid does not mean that your investment horizon or your investment strategy should alter. Same way, we are big advocates of the DAOs that are coming around, which we also regard as decentralized equity, because if structured correctly, all revenues are attributable to the token holders. So essentially, it's a security. And we're with our newest vehicle, we're invested into a borrowing lending platform that is actually the first legally adopted DAO in El Salvador. So it is regarded as a company, but it is a DAO. And this is something that I would argue that will change, could change venture overall, because if you can put all interests into one monetary system, which then would be a DAO, whether it's employee vesting, whether it's shareholder voting rights, whether it's dividend rights, and that being automated, which is what blockchain ultimately does, is something that is quite appealing for us conceptually. It's probably not that relevant in the short term because there's a big regulatory uncertainty towards DAOs so far. But conceptually, and this is what we do when we do venture investments in crypto, we think more than 2 or 3 years ahead, which is what the typical vesting cycles are. So we think in terms of what will be major drivers. And amongst these, we see DeFi as a major driver. But as venture investors, on the example of DeFi, it's interesting to see like how is it actually finding its way into traditional markets, or is it a crypto native only play? So this is something from a venture perspective that hasn't changed. It's still early stage risk, risk mitigated investing. And there's a new sphere that has come up, which is that you can be a venture investor as a private individual as well, because once a token is liquid, it's still early stage, but it's still very much venture when you look at it from a risk perspective.
And very, very good points, especially the DAO aspect, the investment DAO, and maybe one aspect with it as well. The investors at the same time are also members of this community and shape the community. So there's a dual role here of those investors. And in that respect, venture capitalists also become sort of members in such a community, because they would then vote in such a DAO, just as we as a small individual probably. So maybe Alex.
One final remark on this, Oliver. Sorry, Alex, I'll just 30 seconds. And why I think there's a high relevance for professional venture investors as well is we take money from equally professional investors who trust us that we don't just throw it around. So the quality screening of what is being invested in is something where we typically, in many cases, also say, no, we're not going to invest because valuations are inflated and it just doesn't make sense, because retail investors can invest in stuff that is just simply overpriced very early on.
Exactly. That's what I would see as
Sorry,
well.
Alex.
I remember we had a discussion around that, about methodologies to screen ventures as well. So is that Alex von Frankenberg, do you, in light of what we heard, maybe want to add your perspective here, coming from that field here with the long track record here in the traditional venture investment as well, but also open to blockchain and DLT? You are muted, Alex.
I would like to extend on Ron's last point. I think the role of the venture investor is also adding value to the portfolio companies. And I think compared to a pure financial aspect of fundraising, I think the content, the value part, I think still remains important. I totally agree with what the others said. I would like to extend, make 2 points. One point is, crypto makes the whole ecosystem more efficient. It speeds up all the processes, and as what Vito said, with fundraising much quicker, and I would like to extend that point on the fund level. So about 4 years ago, a South African team, Invictus Capital, they launched a tokenized venture fund. I think it was the first one, Invictus Hyperion Fund, and it's tokenized, and you can buy the token, you can trade the token. It's not huge liquidity, but you can trade it. And I think that's a huge aspect because it reduces the threshold, so you can spend just a few €1,000 to invest and buy the token, and becomes much more liquid. It's not compatible with German regulation, of course, but it's compatible with other regulations. So it could open up the asset class to others and make a very illiquid asset much more liquid, because you can just trade the token. So it makes the whole fundraising and on the fund level makes it also much more efficient. I think that's an interesting aspect. Adding on. And the second point I would like to make, if we beam ourselves back into the mid-90s, say 1995, then Amazon is a 1-year-old startup, and Google will be founded in 2 years. And if we beam ourselves back to 2005, when HTGF started investing, Facebook was 1.5 years old, and Tesla was 2 or 3 years old. So, and out of the ecosystem internet, we saw these huge companies evolving. Apple, $3,000 billion market cap, and the others. And the same thing will happen in the crypto ecosystem, because just like the internet, blockchains, not only the Bitcoin blockchains, but also the other blockchains are platforms and networks that will generate on top of the network huge companies, and the value will be spread over the equity position and maybe the token position. So huge opportunity.
And that's basically depending on the network effect. So how many users you attract, how many also developers a platform can attract, so that applications on a base layer basically can emerge, and this whole stack basically builds up. So how these ecosystems develop, and the investors that will be successful, yeah? Please.
The important point, and those network effects are leading to natural monopolies, to winner takes it all markets. So I think there will be very few successful blockchains and blockchain projects. I don't know, today we have like 8,000 or 9,000 different blockchain solutions, and 99.9% of them will more or less disappear in worthlessness. They will be still around, but they won't be valuable. But then on the other hand, those who will become the de facto standard in their segment will become very, very valuable. So it's a risk, a challenge, and a opportunity at the same time, because we know Amazon, as an example, has I think a market share of close to around 40% in the e-commerce market. But we have forgotten all the other companies, like, for example, Buy.com. No one knows Buy.com. It was publicly listed, more valuable in 1999 than Amazon, and went bankrupt, so it's gone. And the same thing will happen in the crypto universe. So few very, very large winners, but many losers.
But that's actually a pity, because we all thought that this is going to be a more democratized future, and we will have a distribution of all the money and all the wealth.
That's what we thought in the internet also, much more democratized access to information, and what we've seen is huge monopolies. And that's the network effects that make that. Okay,
that's an interesting discussion. I would love to continue that with a here look at the clock. We only have time for one, let's say, final round. Maybe just continuing, giving the word here to Astrid. Just here, when you heard all this, what would you add here to the discussion in terms of how would we see a change, or does we see change, and your thoughts?
Well, I think also adding up to all the comments that I've heard before. So saying crypto makes venture capital more efficient. Maybe, maybe not. I know that it definitely puts a lot of pressure on due diligence because there's so much capital around that you have to actually be very fast in assessing these kind of technologies. And also to extend on Lawrence's comment around DeFi, and will it stay just for the crypto natives or will it actually be for everyone? So I totally believe this is a space that will reach everyone, because I think that the days for fiat is actually numbered, and that everyone will live off, decentralized economies, decentralized tokens, because this is also something that we can see going forward in the future, that if we treat our planet as we do at the moment, then we will need to expand beyond this planet, and then fiat money based on in the US economy or European economy doesn't really count that much. It will be more decentralized economies that actually bring the value where people anywhere can access a value and contribute to these networks. But there you go. Yeah.
Yeah, because we are running out of time. Astrid, very valuable time, very valuable thoughts. So I think we cannot make it a very quick remark maybe from Vito towards the end. Bright future actually for entrepreneurs and founders, isn't it?
Well, I could say that from where I stand, I see NFTized future. Yeah. I think that the power shift in the blockchain industry will go into the NFT sector. When I say NFTized future, I mean that the NFT will not be a PFP picture or a JPEG, but NFTs will become the kind of main source of the transformation of the digital value and digital assets in the whole blockchain industry. So the blockchain will just be a computer running your NFTized world.
That's, I think, a perfect, let's say, a closing sentence for the next panel. And actually, the panel after this, I invite you because I know that Stipe, I think, won't be able to join. I think in an hour or so, I'll text you. There will be another panel actually exclusively on NFTs. If you'd like to join, would be very happy.
So, I'll see. I have a meeting, but I'll see. Yes. Okay.
Thanks a lot. We'll see. Thanks a lot to all of you, Lawrence, Alex, Astrid, and Vito. Great panel. Thanks.